Most founders believe that revenue growth is a sign of strength, and in many cases it is. But if you're scaling a heavy business, that growth simply is a lie. Inefficiency and high calorie customers that are quietly eroding your valuation, they're doing it even while your sales are rising. I'm Doug C. Brown, and today we're unpacking why revenue architecture and disciplined systems matter more than the top line. Matter more than the top line. Are you building a business or just the biggest problem? Let's dive in and find out. Hey, Gilad, welcome to the CEO Sales Strategies Podcast. Thanks so much for being here today.
For sure. Thanks for having me, Doug.
Would you let the audience know, just let's set the frame for this particular call, what your company does, and then I'd really like to get into the revenue and margin growth type process.
Of course. So my name is Gilad, I'm CEO and founder of Moburst. We've been around in the last 12 years. And basically what we do is helping companies grow. That's the gist of it. We're a digital full service type of an agency helping with a lot of different types of services, more than 29 now, where you're thinking about growing using media buying, organic, creative, strategy, and product, basically developing websites, applications, marketing the hell out of those applications or apps in so many different platforms to help grow and basically overachieve the growth goals of the company, working with some of the largest companies on earth. When you're thinking about, we had the pleasure of working with Google, for example, Google Maps, YouTube, Chrome, Search, Gmail, these type of beasts, working with Uber and Samsung and Microsoft and those type of companies, alongside with startups and kind of early stage companies where they need to basically hit those specific margins or those specific metrics in order to actually unlock the next round of fundraising and things of that nature. So basically building the entire ecosystem for growth for the companies that we are working with.
So let's talk about building those up, because a lot of companies, they think that revenue growth is like, the gold standard, so to speak, right? It's like they look at revenue growth. But if they're scaling up heavy in a business and that growth, frankly, it's growing, but it's not really that efficiently growing. That inefficiency, that high calorie, customers, if you will, or processes that are in the business, they're actually eroding the valuation of the business while the sales are actually rising in many cases. Now, you started this company from like plain out, just organic start. It's been around for what, 13 years, if I remember, 2013 you started. And you guys have grown pretty rapidly all the way through that process. You've gone through you bought like 5 acquisitions in the company. You've done all these roll-ups and different things and merges. Why do you think that a lot of companies, they focus just the standard on revenue, but they're really not looking at the margins all the way through the process?
I think that the revenue is like also what we were kind of focusing on in the first 4 years of our kind of journey, and we found that we are just growing with the number of revenues, employees, systems, processes. Everything is rising, and the EBITDA basically was staying negative. Where we kind of said, yeah, but we are fueling on more growth. We are getting more clients. We are getting more things, and yeah, the first agreement will not be exactly where we want, but the second and third one, the clients will just become addicted to those services because we are so good at what we do, and it will correct itself. And I feel like in 2017 we said, like, we don't want to basically continue on doing that. It doesn't make sense. It's not the right way of growing. And then we needed to fire a lot of those clients because we couldn't get them from $3,000 a month or $10,000 a month to $40,000 a month, which was the cost of us servicing some of those clients.
Right.
So I feel like we've done every single mistake in the book. And when you're just looking on the revenues, it's very much like blindsiding you about, hey, but it grows, it looks good. Yeah, the profit, I'll get that fixed later on, while we reaching scale. And I feel like that's something that is very, very dangerous. Like, we saw that ourselves, and then course correcting it is a very unpopular decision, and it's a very painful decision of saying, hey, till I actually got those Fortune 500 companies that are working with us, we basically need to trim them down because there is no way of actually becoming profitable because of the way that the agreement is set up, because of the procurement team, because of the setup that they actually made us to commit on things that are not in what we wanted to do, but we kind of say, yeah, okay, let's approve that, let's give them that, and basically created a system where it's so inefficient that you can't make it into a profitable system. So we also been through that route where it's like course correcting there is very, very painful. And basically we fired around half of the clients of the company in 2017 and also half of the employees in the company to set it back to the right track. And 2018 was the first profitable year, and then everything kind of opened in front of us. But till that moment, we were kind of in a growth stage of just get more business, getting 13 new clients a month, and then churning them 3 months later or 6 months later and not being able to extract any value out of it. And it's like, it doesn't make any sense.
Why you've done it, right? And I've done it in other businesses as well. So I'm curious to know your perspective on, because a lot of times companies are just so focused, hyper focused on that revenue growth that they're leaving all kinds of money hanging on the table. In fact, most of the time when we look at companies, it's usually somewhere between 10 and 25% of revenue they haven't even collected, but they've already paid for it. So those margins now are low, just like you were talking about. And there's all kinds of reasons. The reasons you just expressed is, just even in the sales process itself or the customer journey process, they're just, proposals are stagnated, underpricing, all kinds of things are going on within the company. And the money's just sitting there. And then at the end of the week or the end of the month, as the CEO, the founder of the company, they're going, oh my gosh, how am I going to make these payroll payments, this, that, this, right? What is the psychological thing that you think is going on for owners when they're in that mode and they're just growing, 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 or trying to grow, but they're really not focused on the business of the business, which is money in, money out equals something?
I think it is a very hard question because you have so many different reasons for that. Like as long as you're looking on the bottom line and saying, "Hey, I'm making more income now. I feel like I'm on the right track."
Yeah.
And a lot of times you are justifying, "Yeah, but she's pregnant and is about to give birth, so it makes sense to hire someone 2 months before that, and then it makes sense that I have some more fats in the company because I pay more salaries than what I actually need, and that
Right.
person is not as strong as we wanted, so we need to hire another one, and only then we'll be able to replace or things like that." So you're always excusing for yourself why the inefficiencies happen, and at the same time, as long as the revenue continue on rocketing, you're saying, "Hey, I'm doing well. It's just like, yeah, I have some homework to do of cleaning up some of those things, but it's not a big deal." And I feel like once you actually scale, it becomes very painful because then when you're actually starting to do the cleanup, those things can be very painful, and a lot of things you cannot just clean up. Like if you have an agreement now for 12 months with a company, you won't be able to change their model before those 12 months are up. And if though during those 12 months you're not making any profit, you're in pain, and then something happens and you need to actually invest more time or effort into fixing that, and now you're actually making a loss for this client, and it's not a small client, so like why do you need to pay to serve them? It doesn't make any sense. And at the same time it happens. So I feel like a lot of founders kind of focusing on like, as long as my revenue is spiking, I'm in the right direction. And a lot of times if you're not seeing the cost structure next to it, or just for example, one of the biggest changes that we've done in 2016, that was implementing a crazy system that actually track every hour of every employee of what they're investing into each and every one of the deliverables. And a lot of the employees saying, well, why do you want to track every hour of mine on every single, right? You don't trust me. You now want me to start reporting on a weekly basis what I've done, what I've not done. And I'm saying, like, I cannot make an informed decision even about the pricing if I don't know that it takes you 30 hours to do this task, or if it takes you 50 hours. I was under the inception that it's just like we had done it in 2013. It still takes you 30 hours. Now I understand that you added so many more systems and so much more configuration and so many, and now it takes you 50 hours. It's okay that it takes you that, but I need to adjust the pricing. And if I won't going to know that, there is no way that I can actually make an informed decision. So the tracking of those things and building the systems around guardrails where, hey, we overspent on that account. We've done here, basically investing in that specific area 5 times more than what we were budgeting, and saying like, okay, something here doesn't make sense. And then let's investigate it so we'll be able to fix it and we'll be able to plug that hole. But for that, you need data. So before you actually have data, it's almost like impossible to make those decisions blindly. And as long as the revenue is growing, you feel like, hey, yeah, I just need more people. I just need more people. I have like people working crazy. They're working weekends. I don't want anyone to work weekends. And at the same time, you're just working inefficiently because you're not seeing everything you need to see in order to make better decisions as part of that.
That makes total sense. So there was one time in one of the businesses we owned, that we were losing $20,000 a month. And I was just like, but we're growing, right? We're growing. And I was cost justifying it off. And then one day I realized, I'm like, wait a minute, we're hemorrhaging $250,000 a year. I just talked to $1 billion company that was losing 70 million a year. And we were kind of following the same trajectory of where, if we ever got to $1 billion, we would be losing that kind of money or more, quite frankly. So I think the reason I asked around the mindset is a lot of times owners, they're just kind of focused on grow, grow, grow at any cost. But what they don't realize is, and you said the magic words, what happens when something happens, right? That person gets pregnant, you got to replace them, you put someone else in. Um, you know, but what happens when something really like big happens, like the pandemic or the regulatory issues in the industry change, or hyperinflation goes on now, or whatever, and it catches you off guard. Like you said, you can't raise your prices for 12 months. But if expenses are just skyrocketing through the roof, it's not a good place. I've seen companies put themselves out of business in this place. And so, but the mindset of the owner is always like, I've got to make this bigger and bigger and bigger, which is not a bad idea. But what they don't really think about, I have to make this bigger at profitability. And I think that's where we all got or get into that challenge mode, that if we would just step back. And you said something super critical, and I want to cue in on this. Data. Like, I find that companies and owners of companies really don't have accurate data. Why do you feel it's difficult, or is it not difficult and they just make it difficult to get that data staring them in the face all the time?
I think that is a cultural challenge for most of the managements out there, because if you're coming into a company and basically saying, okay, you're reporting when you're off, or you're reporting when you're sick, or things of that nature, which is like, okay, that's basic HR. But then starting to report per task or per client, or per task per client, per each and every team, on different GANs of what you're actually doing, it feels like, for some of the employees, like, well, you're micromanaging me. You actually want to know that I actually invested 4 hours today of doing this task, and this one actually took me 9. Like, why? What, you're not trusting me? Or and I feel like, because of that, a lot of managements don't feel comfortable of asking their employees to basically do that. And then when you don't ask the employees to do that, you don't know that, hey, this task that you expected to take 2 hours with AI tools, in this process or that process, or using the new system that's supposed to save you this amount of time, and they're still doing it in the old way because they never got access to that. And so if you're asking them to report and actually viewing the data on a monthly basis, you'll be able to start seeing the distortions. You'll be able to see, hey, why is that employee that is doing exactly in the same department, but he's actually making everything in 2 times faster than that one? Maybe he has easier clients. Maybe this is B2B and this is B2C. Maybe in here you have like different types of needs in those clients, or revenues related to that. But maybe this employee is actually using tools and automations that the other one is not using, and makes them so much more effective. And let's open it up with the team lead of that team to actually make sure that, hey, if you have hacks, you have ways to do things faster, you have ways to do more, let's get that together. And at the same time, if someone is just slow on extremely slow, we need to know that when we are looking on the evaluation on a yearly basis, and or the quarterly basis of what they're doing well, what they're not doing wrong. You have some employees that are doing phenomenally well, but they're very slow at what they do. And then you're saying, okay, if I'm giving that person that type of a task, it will take me 2 times more than this person. So let's find the right task of the right areas of expertise on each and every one of those team members. But I feel like if you're not collecting the data, there is no way that you're going to make the right informed decisions. And to collect the data means that every single employee, including the most senior ones, including your VPs, including your partners, need to report their time on every single one of those tasks. And yeah, they feel like you're burning my time of even just going into the system and report that. And I understand that and I respect it. But Without it, I'm blind. And if I'm running this ship, that as long as it's a small boat, yeah, you can run it a bit more blind. You're looking on other offices and things. But when you have employees scattered around 14 countries around the world, and you have people that are working different hours, in different time zones, there is no way to manage this type of abyss without having a reporting tool that actually gives you the information, or you can actually log in to actually see what works, what doesn't work, how many hours did we burn on reporting. And I'm saying, hey, you know what? If we burned 4,000 hours in the last month on reporting, let's get an AI team to automate 90% of those reports and now save the massive amount of headache of creating manual reporting for these clients. And now, hey, look at that. In a quarter from now, we can be in a completely different situation. But if you don't know that this is what the team is burning their time on, there's no way that you'll be able to fix it.
Yeah, you just know it's those of you who have ever built done a software project or built a home or a building, right? You get this kind of specked out idea like, hey, I want this software to do this and do that, or this building to look like this. We're going to put these windows in here, and you get a quote basically on that thing. And then if you've ever been in software for a period of time, it's like, well, wait a minute, we got here, but we're not done with this. Now we've got to add this and that and this and this and that. And it wasn't budgeted, or they went over budget, they misquoted, et cetera, et cetera, et cetera. And a lot of people who have done software can relate to that. And that's what this feels like, folks. But now it's on a larger scale than just one project. And those of you who are nodding your heads, you already know you've done this, you're there. But the data is your key and your most valuable asset, because data gives you objective proof that that's what's going on. You might suspect, and I brought the software thing up, Gilia, because one time I had a software team actually in Vietnam, and I was looking at the productivity and the numbers, and I was like, something's off. I can't figure it out. And then when I was able to get the data, I realized that they were actually padding the bill. They were stealing from us, and they had been doing it for about 6 months until I caught it. And I called the owner and I said, hey, you're stealing from me. And he goes, yes, I am. It was straight out, right? And so without the data, you cannot have this objective feedback loop. And even if your people are complaining, like, oh my God, like you said, it takes me so much time it takes me 15 minutes to give you this data, right? When you're growing a rapidly growing company without this data, you are running a huge risk that you will wake up one day and all of a sudden the money's not in your bank that you think should be there. And that is a really rough place to be when running full tilt. So I have a question for you. I find a lot of times employees, they don't realize that they're an expense on the company. Right? Like they just don't get it. They think I got a job, you're supposed to pay me, I show up, I do my thing, so if it takes me 6 hours instead of 2 hours, you're still making money on me, right? Like that's the kind of the thought. And it's, I've been employees in company, I've thought the same way, but when you own the company, you think differently. How important do you think it is for employees to actually understand the math of business? Like to understand how the business actually works and what their position is. Because I have this conversation with sales teams all the time. I'm like, brother, you are an expense unless you sell more than you are, right?
Yeah.
And so when I run the numbers out for them and the math out for them, they're like, oh my gosh, I didn't realize I was that costly to the company. How important, I'm just curious because, you're a super intelligent guy who's been around the block more than a few times, right? So how important do you think it is for employees to understand the actual math of how the business works or how the business works in general and how they fit into it?
I think that this is very crucial part. I don't think that it's a nice to have. I think that that's the way that you should actually get people to understand the bigger picture and understand where to focus their hours and how to actually focus on their time and how to actually help us drive more rather than actually investing in the wrong places. So basically, with the way that we are working, like we have our charge rate of how much we are basically charging per hour, and most of our projects are not project by the hour. Like we are not not saying, hey, we worked 30 hours by $200 or what have you. Okay, great. This is what you owe us. But we are actually bulking it back to a retainer, saying, okay, so you're paying us whatever, X amount of dollars every month. And from that, we are taking that and breaking it down to hours. And then with those hours, we make sure that we are kind of prioritize the things that matter the most for you. Because on marketing, you can always do more marketing. You can always have more creatives. You can always have more ideas or content pieces to your blog, or like you always can justify to do more. But then the question is, okay, what are the things that want to make, like they're going to move the needle in the best possible way? And the only way to do that is basically taking that retainer, reverse engineer that, saying, okay, so we actually have around 60 hours to work with on that client this month on this specific role. What going to be the things that are going to be the most impactful of utilizing those 60 hours in the best possible way? Now, the fact that we have built automations and the fact that we have built a lot of AI tools, and fantastic, I'm giving you the superpowers, but still you have 60 hours to do whatever you need in order to actually unlock the best potential. So I feel like for the employees to understand, okay, why are they charging $200 an hour? Like no one here is getting paid $200 per hour. Yeah. So how the hell did they do that? Like are they making so much more profit? And they don't understand, if you're starting to explain, wait a minute, but if I'm making $100,000 a year and they're charging $200, wow, they're making a killing off of me. But they don't understand that the CFO costs money and the HR costs money, and they're not billable. Like you can never bill for their hours. And the sales team, you can't really, like they're not selling hours. They're bringing you new business, but they're not selling their hours. And the marketing that you're doing for yourself, and the offices, and the infrastructure, and the equipment that you have, and all of the things related to lawyers and CPAs and all of that fun stuff. And then when you're baking all of that together and saying, hey guys, if we're selling an hour lower than, let's say, $130 per hour, we're basically losing money. From 130 to 160, this is kind of where we start to make a profit, but it's a very low margin. We're trying to get to $200 because we know that we're also over investing in 20% of the project on those things. And then this is what we expect to be on. And that's kind of how we're managing those expectations. So when you actually have a task that's supposed to cost you 20 hours and you're actually investing 30 hours on that, basically it means that the company lost money over you servicing that client in that way. And then if those 20 hours don't make sense, tell that to your manager. Again, we can change the pricing. We can talk about those things. We can try to budget things internally in a different way. But if we're just overdoing some things, basically we're just bleeding for no good reason. So when you're actually explaining the entire thought process and saying, okay, so for every billable employee, you have employees that are not billable, the CFO and the people that are actually sending the invoices and the people that are actually finding new talent. And like, there's so many additional employees that they are going into that cost structure that is unrelated with just you doing your work and getting paid for the work based on the fact that you're working on a client and things of that nature. So once you explain this entire thought process, I feel like employees starting to much better understand their role, their expectations, and how critical that is, that if you're doing it wrong, it actually hurts the company. And it's not like, yeah, they're paying their salary, so they don't care if I'm working weekends or working nights or not. Like, I'm still going to get paid the same thing because I have like a global type of a salary. And that's their problem, the fact that it just took 3 times more. And they don't understand it. It's not really our problem. Like, it is our problem, but then again, it reflects on you and how you actually doing your job. And based on that, again, when we are evaluating the contribution and everything, it's very hard to miss those type of things. So I'm in an approach of actually being radically transparent with our employees, where the revenues are spiking, also when the revenue takes a hit, when we actually need to do some layoffs, because we have gone through those processes, I think 4 times from the inception of the company. It's never fun, but sometimes, hey, we just lost 2 big clients in the last quarter. We need to trim back. The fact that now I'm hiring another 20 employees, it's the most fun, and we are breaking new record every single month. It's phenomenal. But I know that it's like a roller coaster. There are going to be ups and there are going to be downs. There are going to be things that are changing. The dollar rate in Israel, for example, that was 3.8 shekels per dollar, and now it's around 3 shekel to dollar. Just that changed my cost structure in around 50 employees by around 30% in the last 8 months. And it's just something that happens. I'm still getting paid in dollars. I'm still paying the salaries in shekels. So I just took like a haircut from a very unexpected type of a thing. And okay, now we need to change and tweak and then moderate in order to make sure that when we are growing, maybe not growing as much in the Israeli market, and actually we're hiring more folks in the UK and in the US and in Bulgaria and in Italy and in many other places, just to not need to kind of have that burden on additional cost structure for the same type of roles. So there's so many things that can change when you are running a company, and you have to be transparent about that with your employees, and actually explaining the logic behind it. And most of the people understand that, hey, it comes from a business rationale and it makes sense, and they weren't going to argue with that. It's very hard to argue with facts and data and proof. But if you're trying to hide that, and you're trying to hide your margins and things of that nature, then it becomes very sticky, where you're trying to justify your actions and things of that nature.
I'm really glad you said this because so many business owners are so afraid to actually like wear it out on their sleeve, so to speak, right? It's like what you're talking about, I've experienced. It's a normal part of business. Things go up, go down, go up, go down. It drives you crazy while it's going on sometimes. You talked about the shekel changing. I mean, mine was the zloty over in Poland, right? It was like all of a sudden it went from, we were like 4.2 and then now we're down to like 3.4. And it's like, oh, so my costs now are going up on a project that I budgeted X on. And now it's like it's X plus. And there's nothing I can do. The British sterling is killing the American dollar and its value exchange, right? All of these things happen. And if and I'm so grateful that you do it the way you do it. And I think it's so important for business owners to hear this because what they're afraid to do a lot of times is actually show people the numbers because they're like, well, then when in the good times we're making this kind of profit, they're going to want me to raise their salaries or they're going to want to do this or whatever. I don't really think we should fear that because at the end of the day, it really comes down to math. And like you said, people are understanding when they understand what the math is. Um, so essentially what I'm hearing you say throughout is we want to improve the effectiveness of what we're doing on a continuous basis by mostly in part by improving upon the efficiencies, the time, the money, the labor, the effort, everything that we can do. And if we can improve upon those areas, then our effectiveness will go up when we're training people to do so. And then when we're looking at our numbers, our margins, and we're consistently growing those efficiency ratios, the effectiveness gets better and therefore the company is much healthier. Did I get it right?
100%.
Why do people not focus like this on that? I guess that's a question that I should probably strike out of this. No, we're going to leave it in this podcast. Why do people, I know you get, in a business, it's easy to get sucked in and you're not thinking about this, but I have not found here in the United States in business systems or business schools or whatever, they really don't teach this. It's like you got a job, a role specific, whatever. And like they're not teaching the basics of building out a business, money in, money out equals something. You got to run your company on that formula. Have you noticed this too?
I think that you have a lot of case studies that are very different. So you can always justify when you're looking on the outliers, like when you're looking on Facebook, for example, that Facebook got to around 500 million users before they actually started to monetize themselves.
Yeah.
Or Waze that was basically bought. They raised $60 million and then they were acquired by Google for more than 1 billion and they didn't make any profit.
Right.
So you can always claim saying, hey, you know what? If those companies manage to do that and then turn their ways, and then why wouldn't I? As long as I continue on growing, I'm on the right trajectory. I'm on the right path. And again, those companies were heavily VC backed. They got massive amount of investments into them. Waze was only 60 million. I think that Facebook probably raised, I don't know, billions of dollars throughout the years.
Right.
And I don't think there are different paths. So if you're on a startup, for example, when you think about Uber burned probably more than $5 billion before becoming profitable. So it's not like a business model that you cannot build, but it's so heavy cash that you need to raise so much money in order to make it successful this way that it makes it very, very dangerous. And if Uber wouldn't be able to actually raise the next round of capital, they would basically be bankruptcy. And the same thing goes for Facebook. The same thing goes for Waze. If they weren't like injecting more, tens of millions of dollars by
into
another VC or acquired by Google, the company will actually decease every action because they wouldn't be able to pay those salaries. So it's not like you cannot build a business in this way, but it's a very, very high risk type of a process, and it's not a healthy way of doing it. Like the level of stress that you have, like if I'm not raising funds in the next 18 months, like the company will die. Like that's the reality. And if you want to live that again, you can live this type of a life. But I feel like because you are hearing about those unicorns that manage to do massive exits and things of that nature, it sounds like, hey, it's lucrative to do it this way as well. Like I can be not profitable, but still I'm building the scale. I will be more efficient as the time goes by. I will build systems that will help me to optimize that. I don't care about those problems. And I feel like once you're actually investing, getting investors into the company, a lot of times they're saying, just build the revenues. As long as the client's there, we'll be able to monetize later on. And it's a very it's a very kind of a slippery slope type of a thing because you're getting used to that. And then, okay, I just need to raise more funds. And
right.
it gets you in the path where the outcome is not as, predictable necessarily.
I love how you said it's the unicorns because, like I'll make it something that may be a little tangible to people. Like we think of people who live to like 100 and more, right? There are people who do that, but it's really only like 0.01% of the population. And if you take that, I don't know what the number is on the unicorns we're talking about in business, but it can't be much higher than that on the. So, folks, if you think about it, if living to 100 beyond is your goal, that's awesome. But remember, the statistics show that it's 0.01%.
Yeah.
And so if you're looking to continuously fund a business, as you are saying, you're trying to live into the 1% of your business cycle of those unicorns. And it's a way to, it only takes one thing to knock you out. You just don't get the money and then you're done. Right. It's that type of so always watch your burn rates in your business. And Gilead, how do people learn more about you, your company? They're like, what, I need some marketing. I'm a this type of company. I want to be around this guy, learn a little bit more. How do they get all of you or your company?
Of course. So you can go to moburst.com, moburst.com, or find me, Gilad Bechar, on LinkedIn. And again, would love to be in touch and help with whatever we can. We also have like a very sophisticated blog with lots of examples, lots of case studies and things. So you can even learn yourself. You don't necessarily need us as kind of a service. We are sharing a lot of information, just trying to be as helpful as we can for the world.
Yeah, and folks, check out their website. It's moburst.com. When I looked at the website, I was thoroughly impressed. You guys, it's a great website, and I look at a lot of them, so I don't say that about hardly any of them. So thank
Thank
you
you.
for being here on the CEO Sales Strategies podcast. Thanks for bringing your A game, and I know there's a few people thinking, ah, damn, right? And I know this, and that's what we want to move them from point A to point B. So thanks again for being here.
Of course. Thank you very much.
Hey, everyone. So we found out that discipline isn't just about working harder, right? It's about the math of your exit. Remember that for every $100,000 in EBITDA that you recover from hidden leaks, it's an extra $1 million in your pocket at a 10x multiple. So think about that. $100,000 equals $1 million on the 10x multiple that you could get for your company. Now, whatever the multiple is for you, just multiply that $100,000 times that. If it's 5, 6, 10, 20, whatever it is, you get the numbers. If you feel like your business is a lead weight dragging you down, it's because your systems really aren't designed for leverage. That's really the bottom line. I offer a CEO sales strategies diagnostic to help you find that hidden revenue, the margins, the 15 to 25% just sitting dormant because your, say, follow up is failing or your pricing is stale. Let's stop guessing. Let's start collecting the money you've already earned. Reach out to me at Doug at CEOsalesstrategies.com to identify your hidden cash, and we'll do it right away. I'm Doug C. Brown. Now go out and protect your value. And as always, go sell something, Sell as much as you can at a profit. Don't discount. You don't need to. It's all about the conveyance of value. Until next time, this is Doug C. Brown saying, to your success.